want to know in terms of, why is derivative market so important for the entire value chain? What is it that everyone in the value chain can do to help them, in terms of leveraging the benefits of the derivative market?
For BCP, we can say first of all, take example of farmer. Generally, farmer look the current price. Take example of cumins. Right now, prices are very well placed around 55,000 level mark. So generally, what happened? Farmer look to these current prices and go for sowing. But at the time of harvesting, we generally see when the arrival pressure comes in the market, generally prices started dropping. That can be very much concerning to the farmer because we have seen in many agri cases like edible oil complex also when the prices were high at the time of harvesting the prices went down. So here farmer with the help of FPO can use the exchange platform to hedge their position in advance by taking a short position on exchanges so that whenever at the time of harvesting when prices comes down that won't be impacting to them. Secondly, as we have already talked about the exporters where we can see he can start procurement from the physical market and simultaneously make a position on exchange with a lower working capital that can be helpful for them. And last would be the stockist or whenever they're having a good stock in their hand and prices we have recently seen Jira prices has came sharply on higher side. There is a risk that if the prices comes down, then definitely it will be a pinching to their business. At that time, they can take a reverse position or we can take a short position on exchanges so that whenever there is a fall in prices, then definitely they won't making much losses. They will be properly hedged. So in this way, VCPs, value chain participation, that will be farmer, stockist, exporter, or buyer, can take a help on with the help of exchange product. They can hedge themselves.
Absolutely, and one thing that impacts the prices is, the weather conditions, the unseasonal rains, as an El Nino factor that comes into play. So, how could one use this strategy to protect themselves in terms of the price movements, whether it's an upward price movement or a downward price movement?
See, I think any business or any manufacturing guy will definitely look for a profit from operation, not from profit from volatility, price volatility. So generally, we see whenever there is a this type of any news of weather or export, import or anything news that will impact prices definitely. We have seen spices, oilseed, every commodity has been traded with this type of news only. Like, let's see, 3 months back when we have got a update from IMD that this year going to be a poor rainfall or El Nino will be impacting. Suddenly, we have seen prices shoot up. So in this time, VCP generally have a concern about this type of volatility. So what they can do, they can make according their requirement. They can make their position on future action. Let's say whenever there is an El Nino impact, we know the production can be hampered, and whenever the production is going to be down, prices is inversely correlated with this production. So whenever production is lower, definitely prices will go up. So according to this information, trader or stockist can make their position on future action with participating with a minimum margin of let's say 10 to 12%, which will be definitely saving their working capital also. And whenever there is a risk of this price fluctuation, that will be insulated by taking a hedging position on exchanges.
Okay, thank you so much, Mr. Kedia, for joining in with us this afternoon on Commodity Corner, as well as making us understand how derivative market can help the spices industry and spices derivatives as well.